Hey everybody, welcome to this free edition of our Trader User Group Weekly Roundup for the trading week ending August 16th, 2024. I'm Preston Brent. Thanks for tuning in. Well, what a wild week we had. Buyers really stepped in this past week. We had a huge amount of money flow coming back into the market this week. Let's take a look at how everything fared. Everything is in the green. Even the worst performing sector for the week managed to finish in the green. Very solid week. We've seen that investors look like they're celebrating a lot of positive news on both inflation and on the growth front. Really bolstered hopes that the economy may achieve a soft landing after all. I mean, by the end of the week, most analysts polled by FactSet were estimating that the overall earnings for the S&P for Q2 is going to come in at 10.9%, which would be the fastest pace of earnings growth since 2021. Now, coming soon, we're going to get the expected first rate cut. That would be at the Fed meeting in September. We're going to get Boom Boom Powell. That would be Jerome Power Ranger Boom Boom Powell. He's going to do a keynote address at the Jackson Hole, Wyoming Symposium. And that's slated to go off this coming Friday at 10 a.m. Eastern Standard Time. And he's probably going to telegraph a rate cut in September. That'd be the first in 4 years. Remember, the Fed's raised their rates 11 times since COVID hit, and they brought us up to 5.2 to 5.5%. So this could be the first in a series of rate cuts. If you look at the markets, you can see everybody was very strong for the week. NASDAQ had a very strong week, up over 5% for the week year to date, coming in double digits for both the S&P and NASDAQ. Russell back in the green, the Dow in the green. Really nice for the week. In fact, we got at Walmart gave us guidance showing that their consumers coming in strong, which helped. We've got retail sales surging over 1% in July. That's the best showing for retail sales in 18 months. And we also got inflation data this week supporting the sentiment in the markets. Tuesday, we saw core PPI was flat, which kind of ended 3 months of increases, while the CPI on Wednesday was kind of in line with expectations, but it wasn't moving up. Year over year, CPI actually fell below 3% for the first time in 3 years, came in at 2.9%. And so all in all, the market seemed to just be ready for this whole buy the dip moment after the markets pulled back. And in the SPX, it was down intraday 9.71% a week or so ago, a week and a half ago. And the E-minis actually hit correction territory a week and a half ago intraday. So buyers really came back in. You can see the forward PE ratio coming in at 22.54. You can see the earnings yield sitting at 4.41 for the markets. Current VIX was down 27%. The VIX, saw prints of over in the mid 60s week and a half or so ago, and now it's down. We're back into the 14 handle, down a little over 27% for the week. Okay, and the 10-year Treasury note decreased most of the week on this weak inflation data. So all in all, it was a fairly strong week for the equity markets. You can see the best performer for the week, technology, up a whopping 7.67%. Even real estate, bringing up the rear, was up 14 basis points. Utilities, unsurprisingly, is still leading the way year to date, 19.52%. That tells me that there's still a lot of money going into value stocks and not traditional growth-oriented stocks. Discretionary is bringing up the rear, 2.86%. If we swing over to the European markets, you're going to see here everybody was in the green. Over in Great Britain, we did see headline inflation. In the UK, it ticked up just a little bit to 2.2%. It was at 2% the prior month. But we did see growth in services prices slowed a little bit more than forecast. So that prompted the markets over there in Great Britain to price in a higher likelihood of interest rate cuts later this year. And the economy there in Great Britain remained strong through 3 months in June. Their GDP expanded 60 basis points sequentially, following a very strong rebound in Q1 after last year's recession. And then in the Eurozone, you can see all the markets are up. CAC 40, DAX, Euro stocks, all of them up. The only one in the red year to date is the CAC 40, and that really moved into the red when Macron called that snap election about a month ago. And even though he won back, he had to give up a lot of some of his policies. But the country went more socialist than before, believe it or not. So the Eurozone, they expanded in Q2 about 30 basis points, the same rate as Q1. Industrial production contracted just a little bit in the Eurozone, 10 basis points, falling a little bit short of consensus estimate, okay? Even so, the labor market in Europe, it remains fairly resilient. And employment data in Q2 expanded 20 basis points. So all in all, they're bottoming and seem to be coming out of a funk that they've been in, which is why I like the euro over the dollar. And then, of course, we go over to the Asian markets. You can see the Nikkei. Look at that, 8.86% for the week. Now, that's an index. It's huge. Markets rebounded really strongly there. It was a holiday shortened week, too, so they didn't trade the entire week. Most of it on GDP coming in much stronger than expected. In Q2, on an annualized basis, it expanded over 3.1%. Huge for Japan. So that helped market sentiment dramatically. And meanwhile, the yen pulled back a little bit on hopes that the Bank of Japan is not going to get into a more aggressive rate hiking cycle. So that really helped export. So all in all, the markets over in Japan really loved what they saw. Meanwhile, over in the Chinese markets, again, green for both China and Hang Seng. Year to date, China is the only other major economic power that's in the red outside of the France market. But the data that we saw in China still continues to highlight weakness in their economy. I mean, we did see industrial production rise, but below consensus, it came in at 5.1% in July from a year earlier. The prior month is at 5.3%, so it's still fairly weak for China. Retail sales did expand a little bit better than expected in July, up from a 2% increase the prior month, but still overall very weak for China. And, on the real estate front, new home sales in 70 cities across China fell 70 basis points, unchanged from the pace of declines in the prior 2 months. So that's 13 straight months of moving lower or being lower. So, what that's doing is real estate is continuing to be a very big drag on the Asian markets. And I think it's going to continue that way through the remaining part of this year. What I want to do is I'm going to shift you over and just show you some of the key indexes, market indexes. We're going to go to the SPX cash index first. I want to show this to you. What you're going to see here is takes a couple of seconds to come up on the screen. You're going to see I've got a number of lines on this screen. I've got Fibonacci extensions combined with Fibonacci retracements. Okay. You can see, and let me just turn my pen on so you guys will be able to see what I'm talking about here. You can see that we had this huge move lower, right? And that kind of pattern generally results in a pattern like this. And then we make a bottom low, and then we chop around, and then we start moving back up again. But what's happened is we've extended this rally a lot further than the markets and the chart pattern would suggest. And there are a number of reasons for that. You got market sentiment, you got inflation coming in more favorable, you got the markets anticipating more rate cuts than what the Feds are saying. A whole host of reasons moving the markets a little bit higher, but we're going to come up to a key level here. You can see this shaded zone right here, all right? That was these highs made over here and over here, and then it acted as firm support here before being firm resistance right here. It's a key level. Let's just, for round numbers, call it 5,600, all right? Now, you can see that we're way over the 50 EMA, which is the red line right there. We stopped on Wednesday right in the middle of the day there, but we gapped up here and then this is the 200 EMA right here, okay? Normally when you have these gaps in the SPX, you generally end up filling them, which would suggest we're going to run into some difficulty here and come back down to this 55 to 54.75 area, which would suggest 50 to 75 points to the downside over the next week. I do believe momentum can carry us up a little bit more, but we may fail at making new highs on this first run up like this. And I do see the markets turning a little bit more neutral to negative downside once we get through the Feds. I believe Boom Boom Powell is going to stick to the script of saying they're going to depend on market data, but he'll probably signal one rate cut. The markets seem to believe there's going to be 3 rate cuts. There's some even pricing in 4 rate cuts before the end of this year. I do not see it. I see 1, maybe 2, and that would be it. Okay, but the markets are getting ahead of themselves again, like they did earlier this year when they were expecting 5 rate cuts for the year, and they backed it off to just 1 rate cut. So this is the chart that I see, the SPX cash index, and as you can see, or as I'm highlighting here, it's rare that you get a V bottom like this. I mean, just to highlight it again, it's rare that you have that kind of move, right? And generally, part of the reason that we went so low here was the carry trade in the Japanese yen. So it extended down right to that fib node right there. If you'll notice, there's 2 nodes sitting right on top of each other, and it just came to it perfectly, and then it bounced back up. But this is going to be the moment of test right here as I move this out to get back up above this area. I think it's going to have a little bit of difficulty doing that, but I think the momentum can carry us a little bit higher. I don't think we're going to make new all-time highs before the Feds, but then again, Boom Boom Powell could, based on the words that he uses in his speech, it's going to be this coming Friday, August 23rd at 10 a.m. Eastern Standard Time. That's New York time for those of you that are European or Asian based. And that's going to move these markets if he says something other than what is expected. Okay. You can see the intraday low here for the SPX was 9.71% down, just barely less than contraction territory. So, and again, you don't normally get, when you get a V bottom like this, and then you come up and then you test this top, sometimes it falls just short. It'll come up and retest, come back down, and then gather a little bit of momentum, and then make another run at that top again. Because we've extended so far off of these lows right here, the odds of coming down and making new lows have gone down dramatically, but they're still there. They're still persistent. Okay. So if we come in and take out this fib node right there, which is around 5325 to 5300, that heightens the probability that we're going to come down and we're going to test these lows that were made right around 5119. So call it 5100. So we've got a couple of moments of truth here. Are we going to be able to clear this level up here where this really the hard downdraft started the end of July, early August, or are we going to run into a little bit of a buzzsaw and just pull back and gather a little bit of strength and consolidate leading up to the Fed Boom Boom Powell speech this coming Friday? We're going to get a lot of retail sales earnings this week also. And these earnings will either cement or challenge the consumer spending. It's going to be real interesting how we got this, but we're going to get, I think we're going to see Lowe's, we're going to see TJX, Target, Dollar Tree, Ross Stores. All of these retails are going to give us an idea into consumer spending patterns. And it's a mixed bag so far. We've had some saying that they're going to be cutting back and others saying they have no issues. So we're going to see how this all starts to play itself out here shortly. Okay. Now I'm going to switch the screen over and show you the exact same thing, but using the EMini S&P 500 futures. All right, so let's just switch over there like that right here. It's going to take about 5 seconds to come up on the screen for you, 5 to 10 seconds. And you're going to see over here on the S&P 500 EMini Futures, Intraday, we were actually in correction territory. We were down over 600 points, came down to 51.20 intraday, down 10.51%. But again, we got that V bottom shape, and we got the exact same pattern up here that we're going to have to take out, these highs right there, which are sitting right at about 5,600, right? That's sitting right at about the 5,600 level. And then I could extend this over here, and you could see where market price action was resistance here until we finally broke out here. And we were only broken out for just 2 weeks before it gave it up again. So we're going to have this retest here. We're over the 50 EMA. It's probably going to retest. Odds would favor a little bit of a pullback here, but momentum can carry us a little bit higher. Do I think we're going to make new all-time highs before the Feds this week? I don't think so, right? New all-time highs would be over 57.21. We closed at 55.36. But let's see how this thing plays itself out, right? Pullback point to me would be right around 54.50 this week. That would make sense to me, more so than just another sharp rally off these lows here. Okay. Now, if we come in here and let me just get this, let's get this set on the screen here. Just widen that out a little bit. If we come in here and we look at the Russell, okay, the Russell is up about 3% for the week. You can see here we were actually in the red. We closed in the red on August the 7th, 10 days ago. 10 calendar days ago, we were in the red. You can see the intraday low there. The Russell was down in correction territory, down 14.12% intraday. And then it managed to move back up. We tested the 200 EMA several times, but we did not close below it. And now we move back up over the 50 EMA again. So that's all a very positive sign, right? But again, this pattern suggests a rollover, just like the other pattern did in the S&P. So you still need to be very careful in these markets. And if we look at the Dow, you're going to see the Dow here. Again, same pattern. It was only down 7.16% intraday at the lows over here during this recent move lower here. All right, but this is my original resistance point, which is going to provide further resistance in the markets here. So I don't see too much more upside in the Dow, just like I see in the other indexes as well. And then, of course, if we look at the Russell, I'm sorry, not the Russell, but we look at the NASDAQ 100, which was the strongest for the week. You can see here intraday, right? We almost were in a bear market. We were down 17.31% on the NASDAQ 100 futures. Now, remember, the NASDAQ 100 futures, about 48% of the value is the Mag 7. So really, you're looking at the Mag 7. You can see here, it closed one day below the 200 EMA, and it made it back, and now we're back up over the 50 again. So a lot of damage to the chart has been undone with this move higher. So we've got a key overhead level here at 19,691 for the NASDAQ 100. I want to see us get over it and hold it. But again, this chart pattern would suggest a lot of chop coming up with a little bit of a pullback. All right, that's kind of what it's showing here to me. And of course, let me just get this squared away like this. If we look at the VIX, you can see the VIX here back down to 1480. Look at that intraday move with the VIX. This is back on that really crazy wild ass day on August the 5th. The VIX was up 65.73 when we had a little bit of a market issue here. And then the VIX just gave it all up, and now you can see it's moved back down here into the yellow zone, right? And while we're in the yellow zone, just as a reminder, you can see it's a very choppy market in this zone here that I call a choppy market zone in the yellow here, which is really basically between around 14.5 up to 20, right? Once you get there, if the VIX hits that level moving up, the odds favor it continuing to move up. That height right there is going to cause the VIX to stay elevated for a little bit longer than normal, all right? Because when the VIX moves back up into the red or even into the black, it stays elevated longer because the market is very nervous. So that's a little bit about what we got on the VIX. And then, of course, if we look at the front month skew, just to kind of see, we're comparing the VIX in August. You can see here that just barely in the green. So that tells me the markets are still nervous, guys. So just understand that we're barely in the green, not quite in a backwardation. And then if we look at the back month skew, comparing August and September, we're again in the green, but not by much. So the market's still got a lot of nerves going out there to September. And keep in mind, we got elections coming up in November. So the volatility is going to stay elevated, or as they would say, it's going to stay bid because there's a lot of agita in the markets right now. And then, of course, if we look at the 2-8 spread, if we look at September and March vol futures, you can see here it's in the green, but not, the markets are still showing a lot of nerves, right? Let's just put it that way. And that means any downdraft, if we have a further down move than normal, let's say more than 20, 25 points in the S&P, you're going to see the VIX go up a lot more than normal, right? Generally, when the VIX is transited these high areas, then it's more nervous and it tends to move larger percentages to the upside on smaller moves lower in the lower in the S&P, if that makes sense, right? But that's how it works. And of course, if we look at the bond market, you can see the bond market here. We broke out of this rising symmetrical triangle here, this dashed line and this higher lows right here. We broke out. You can see the 50 breaking out over the 200. We're having trouble getting into the green year to date for the bonds. This is a number that we crossed at the beginning of the year. So you can see right here with this, we had a high back over here on March 5th. That was the date of the basic crash, the big intraday low that we made. And then the bond market sold off, and now we're trying to fight back up here again. Remember, the higher bonds go, the lower the interest rate moves. Okay. And then, of course, if we come down here and let's look at currencies, if we look at the US dollar, with everybody, including the kitchen sink, forecasting lower rates, well, it should not be a shocker that the dollar is moving lower. You can see the 50 crossing the 200. I've been saying for a while now, for several months, the dollar, you want to be long euro dollar or long yen dollar. And I like the yen, but if we look at the euro, you're going to see the euro is going to show strength here, right? The euro is coming up. It's probably close to moving into the green for the year, right? My target for the euro was a little bit higher than this, up around 112 area. And that is something that I think the euro can see before the end of the year. And then, of course, if we look at the Japanese yen, as you guys know, I've been pushing bullishness in the yen for quite some time, especially over here when the yen was relatively low. You can see the big move here. This is profit taking right here. I think the yen's going to chop around, but longer term, the yen is going to move up. And my original target that I sent out to my members in our chat room, let me just see if I can move this out here. I said that the target for the yen that I had was right up this area here, which would give us about a 15.64% move right there in the yen. Okay. Now, if you're trading the futures market, that's a big move for the yen, profit-wise, and we're just a little bit more than halfway there from back over here where I was saying go long the yen. Okay. But that's a good trade. I like it. And then, of course, if we look at gold, gold had a very strong day on Friday, up 53 points. In fact, I haven't even had a chance to adjust it yet, but it made new highs. It broke the 2,500 barrier. Now, I thought gold would pull back a little bit, show a little bit of signs of weakness, but the fact that gold is moving up here shows that there is a lot of fear globally in the markets. It's not a very good setting, and people are starting to rush to buy gold. And generally, when you have gold moving like this, what that means is you got a lot of sovereign wealth funds. You got China and Russia and Iran and others buying gold and stockpiling, along with sovereign wealth funds just buying a ton of gold. All right. And as we go into the fourth quarter this year, gold is a naturally bullish asset anyway. All right. People tend to buy gold around the Christmas time, the holiday time, as we go into the fourth quarter. So gold is just on a rush here. Silver, if we take a look at silver, you can see here Big move in silver. We move back up. Silver's catching up with gold. Very strong day here. We move back up over the 50 EMA. It still has a ways to go, but it's correcting itself. I like them both to the upside. It's going to be choppy, but I do like them long term to the upside. Copper, longer term, I do like this to the upside too. All right. Remember, this big move lower is basically the result of China's economy and the dump. Now, eventually, China's going to settle in and move higher, and you're going to see copper move up. Okay. And the more they promote EVs and those types of automobiles, it's also going to put some upward pressure on copper also. Then, of course, finally, if we come down here and look at oil in the energy markets, you're going to see oil. Generally, we had a double test down here. I think it may slide back down and test it again. If it breaks, it's going to come down and make new 2024 lows, which were done at 69.28. Okay. And of course, if we look at nat gas, let me just find that here. If we look at nat gas, I want this to go lower. Any move higher should be sold off. I think that is a sell up there. I think it's going to take out these lows and go lower, and then we're going to look at wanting to go long nat gas. All right, for members, I'll see you this Sunday evening. Got a couple of other stocks to take a look at. If you're not a member, I highly encourage you to come in and check us out. We're having a good time this year, and I think next year is going to be even more interesting. It's going to be tricky. Everybody have a great weekend. Enjoy the pro football as it starts to kick off their games. And otherwise, I will see members. I'll see you guys Sunday evening for our weekly market watch. Ciao, everybody.